Yeah, I'm Chris Nuttall. I'm one of the technology correspondents with Joe and Richard in the San Francisco office. I've been here for about 7 years and covering all kinds of beats. So this is going to be a great discussion. I'm joined by Professor George Foster, who is the Konosuke Matsushita, is that how you pronounce it? Professor of Management, Graduate School of Business at Stanford here. He's also before I start, there's one thing I have to remember to say is people aren't tweeting enough apparently, so I have to remind you of the hashtag, which is FT Stanford 2011. So please tweet any pearls of wisdom that you hear. Professor Foster is currently the chair of the World Economic Forum's Global Agenda Council on Entrepreneurship. He's also working extensively with the World Economic Forum. He's been on the boards of 2 venture capital firms, as well as the boards of multiple early-stage companies. He's published extensively on entrepreneurial companies and their growth accelerators and inhibitors. Next along is Bill Wynn, who is the founder of Color, your latest venture. He's a serial entrepreneur who's spearheaded the successes of 7 technology startups. In 2009, he led the sale of Lala to Apple, and Lala was the first full-service cloud music experience and the only online music service to be acquired by Apple. His current company raised $41 million this year, I believe. It's probably the largest funding figure for any startup pre-launch that I can think of in the Valley's history, and it's just in the process of releasing a version 2 that resides on the Facebook platform, in which I've been using a lot to watch Bill skiing up near Truckee over the weekend. Next to Bill is Dan Rose, who's the Vice President of Partnerships and Platform Marketing at Facebook. Dan's responsible for Facebook's worldwide business development and M&A activities. He leads product marketing and partnerships for the Facebook platform and credits, which means he talks to people like Zynga, who, as we all know, are on an IPO roadshow at the moment, Spotify, others like that, about how they build their businesses on this huge social platform, which is now Color, almost forgot Color. Yeah.
Let's not forget them.
It's one for the future, yeah, obviously. And more than 800 million users now of Facebook, an amazing figure. He joined Facebook in 2006, and before that you were with 7 years at Amazon.com. And I think the last thing you did there was work on the Kindle, the very first Kindle.
Yeah.
So, fascinating stuff. And finally, Maynard Webb, chairman and former CEO of LiveOps, the cloud call center company. Is that a fair description of LiveOps? Or, well, we'll get to that.
I didn't hear it.
LiveOps, it's
a cloud
call center
company,
in the cloud.
and a workforce in the cloud company.
Right, yeah. He's almost 30 years of experience developing and leading high-growth companies. He joined LiveOps from eBay, where he did just about everything. He was chief operating officer, directed engineering and technology operations, product development, customer support, trust and safety, global billing. Yeah, I'll cut short there. You're also Senior Vice President and Chief Information Officer for Gateway, and you've held management and leadership positions at Bay Networks, Quantum, and IBM, and you sit on the boards of several companies. You have your own investment network now, you're telling me about, the Web Investment Network, and you're on the board of AdMob and Salesforce.com. So we're talking about the paths to profitability here, and perhaps I can start with you, Professor Foster. You've been taking part in a study of around 15 companies in 8 to 10 countries around the world. We're very, very Valley-centric here when we think about startups starting out with huge funding rounds and moving elegantly towards IPO. Is that kind of thing repeated around the world? How different is it compared to the Valley? Can you give us some insight to what's beyond here?
I think it's actually, there's a lot of similarities in terms of the early stage company growth paths, in terms of a lot of people have these notions that you go through losses and then you get the profitability and you keep on going. I think if you looked globally on this, there's a lot of companies that have what I call a one and done growth path spurt. And so if you looked at the fast growing companies listed, and we've done this for about 13 different countries, Deloitte publishes the fastest 50 growing companies. When you look at the consistency over time at which those companies are there, 70% of those companies are one and done. And it's an incredible statistic in terms of the challenge of sustained growth. And it doesn't matter whether it's Japan, China, India, Israel, or the US. The same number pops up. And it's easy to start a company, it's hard to scale, but the sustaining scale is really the huge challenge out there, and that comes across in spades.
And here we're obsessed with social, cloud, mobile. Are there the same kind of stage of development in other countries in terms of what they're focusing on?
No, I don't think you can sort of generalize to that extent. I think that certainly some of the Chinese ventures, there's a lot more activity in the consumer space, some of the retail space out there. And what's interesting about the Chinese companies when they get their venture funding is they're a lot closer, and they are mostly in profitability stage. So if you looked at Israel, it would be at this stage on one extreme where there's a lot of investing in what I call pre-profitability, even pre-product stage. In some of the back end is China, where there's much less investing, and there's a huge gap in China in the pre-stage, but there's far more in terms of profitability, retail, consumer.
And here, are we seeing, you talk about growth, can that growth be sustained? I mean, you kind of do valuations on companies where you have to sort of look far out on these things. What are you kind of predicting on this?
I think several of the parameters that's happening when I've called into value companies, one is that the upside of the tail has really gone stronger in terms of whether it's a 10 million, a 10 billion, or $100 billion valuation. And so that likelihood that you can go to get the upside, if that stays there, then it's going to pull up at the early stage of a sector as it's emerging a lot of companies, but then it reaches a pivot point when you realize that this is the company that's going to take most of the cream in that industry, and sort of some of the other companies drop down. So we're seeing far more turbulence in terms of the ups and the downs. And I think the statistic I look at some of these industries, in General Motors, they lost 1% of their market share over a 20-year period. You just plot the chart and it's going down. It's a very depressing chart over 20 years. That doesn't happen in the sectors we're talking about. I mean, the scary thing is you have MySpace going up like this, and then 3 years later, it's going down sizably. And I think that turmoil is part of something, in valuation is much harder to handle than historically has been the case.
So Facebook's probably doomed about 2 years out from now, I guess.
I mean, there are exceptions in all these rules, but I mean, the challenge of a Facebook is, this is the business gravity effect. You know, at what point, when you go to 500 million, 600 million, 800, business gravity operates. Now, whether it's the number of people on the earth that's the gravity up limit to Facebook, I don't know, but they'll face business gravity just as Google did.
Bill, can I turn to you perhaps then? I mean, it's a good point to turn. I mean, you've turned to Facebook, as it were. You've sort of bet the company on Facebook in a way. Can you explain your thinking on that?
I think it's, I had this amazing opportunity, by the way, wonderful programs at the World Economic Forum. I had some of the best experiences going to Davos and those experiences. One of the things that we learned at Color was, I came out of Apple, and at Apple we really believed that these portable devices were going to change how people live their lives. Like, these phones were going to be significant. I started Color because I just wanted to go build something that wasn't being done at Apple, which was around the fact that I thought that these devices, beyond just allowing us to have our computer when we're not sitting at our desk, was also going to help us tell the story of our lives. And obviously, you know, when we started, we tried to do it in absence of what Facebook had done, because we didn't understand it. And I think to a great extent that, as we've seen over the last years, the most significant pieces of technology change, this is what entrepreneurs hope for always. You want to start a company when there's so much disruption that the opportunities are rather infinite. And I don't think I've seen anything more significant than what's happening with portable devices, that every single person, whether it's Android or iPhone, has the access to portable computing. That's amazing. And it's not just looking at information, it's also all the sensors that are on this device. I mean, it's the fact that everyone can use the camera and the video and the accelerometer and all these things to tell the story of what they're doing and share that with their friends. It's going to be significant in terms of those changes. Now, at the same time, that's publishing, that's creating information. The question is then, who discovers it? What we've learned is that there's no other platform than Facebook. And this is really an interesting example. We're sitting at lunch, and I'm showing a small video from my phone. I'm live casting. I'll do that here too. And I'll do it. It's kind of fun. I'll put you guys on the spot. So what happens on our app is that whatever I see on my camera right now, we're just going to show you in a second, everything that's seen on my camera will be seen across my entire Facebook network in real time. So literally, people are seeing exactly what I'm seeing, so they're all seeing you. he sees it too.
Yeah,
So it's pretty awesome. And so, and you notice like in real time, there's like 12 people that are seeing exactly what I'm seeing. So it's silly, but the premise of it is that I could have been trying to show this to someone that's sitting at my desk at work. But because it's on my graph, all of a sudden my mom or my cousin sees it and they say, oh my gosh, I didn't know what you were up to. The serendipity discovery of information is a profound change, because I go back to, because I love the history of technology. I remember when Yahoo started, there were librarians sitting around looking at web links, helping us to figure out what it was, because they said, the web is too much information. You got to have people that know what they're doing to organize it. So they literally had librarians. And so Google said, well, that doesn't make any sense. Can't we just figure this out? And so that way the entire body of knowledge is discoverable by everyone. But what's happened over the last several years with Facebook, and it's going to become more and more so as you see this thing called the Open Graph, I'll let you talk about that, but with the Open Graph and everything else, and what's happening with Facebook is I'm discovering information from my friends. So I get the entire breadth of all the content and information on the web, but it's curated by my friends. That's going to dramatically change every business we know, because all of a sudden discovery is going to change. If the way that I'm creating the information, the way I'm viewing it because of the post-PC devices is changing. And if how I'm going to curate it's going to change because of Facebook, it's a good time to be a startup. And so we raised the largest amount of money that anyone would stick their hand out to give us, because we think it's going to be hard to do. We think we're going to make a lot of mistakes on the way, but we're pretty enthusiastic about the future of it. It's the most fun I've ever had.
I'm interested in the mistakes, because that's how people learn from those mistakes, obviously. And when you did start out, the huge amount of money, the huge amount of media attention, I read about you, everybody wrote about you, and it didn't work first
it didn't
off.
at all. It was terrible.
Yeah. So what are the kind of pitfalls of? I think one of the earlier panelists talked about people can have too much money in the bank and they don't do the things they need to change. They need to be lean and mean, that kind of thing. But do you feel that you've overcome those problems of having too much money, as it were, and too much attention? Or?
If I could raise more and I could get more attention, I would take it. I think the premise for us is like, I think it's different. I think when you, and I remember this from my own personal experience. The first time I started a company, I had $3 million. I mean, this seems like a lot back in 1994, but every decision I over-dramatized. I thought so hard about it because I thought it was the only decision I could make. And along the way, I just kept taking bigger risks, and I didn't worry so much about the consequences. Because I strongly believe that our future is going to be significant. And by the way, this happened at Apple too. Mm-hmm. Apple got better as it had more resources, because it could take bigger risks. You can make a brand new revolutionary device and push it through the channel because you have 300-something retail stores. You have really qualified people telling users about the product. You don't have to trust the person at the Best Buy. So they were able to take larger and larger product risks as they went along in their halo effect, because they had the resources to do it. Otherwise, they would have never done some of the things they've done. They had the ideas behind the tablet and the phone forever, but until they had the retail, until they had the shoulders and the resources, Steve was nervous about doing it. So I think for us, in a very light way, one of the lessons I learned about Apple is that, hey, look, if you have the opportunity to take the risk, do it.
And
because the startup game, you have to be right just once, right? I think that's my theory. You just have to be right once. Yeah. So I might as well take as many shots as I can.
The more money you have, the bigger the risk you'll take, or is that the way?
Yeah, we take big, giant risk every single day.
Right.
We try. I think it might be me. Is this me? No?
Okay.
The buzzing.
Yeah. That's not me, I don't think. Dan, so you have the, is the buzzing really bothering anyone?
There's something hissing.
It's this one speaker, perhaps, yeah. Dan, you mentioned Color as being one of your companies, as it were, on the platform now. Mm-hmm. And we're seeing your first baby, as it were, being pushed out in the next week or two, Zynga, with the IPO. Mm-hmm. And valuations, 9 billion, maybe 10 billion, we'll see how it pans out. But is Zynga a one-off, or do you think it's going to be the start of a whole bunch of companies making profits on your platform?
The way we think about this, and I think it speaks to what you were mentioning in terms of having 800 million users, is really for the last 7 years, if you think about Facebook, what we've been doing is we've been connecting all these people across the world and building all of these connections. What's exciting to us is we think of that as just the beginning of what's possible, because really the question that's in front of all of us now, and I think the question that Bill just did such a great job of articulating and getting excited about, that has a lot of people excited, is now that all these connections are in place, what can you build? What kinds of new things can we do? And from our perspective, that means that we're really just getting started. That, we have an example of a category that saw the early potential of this, and some entrepreneurs, Mark Pincus at Zynga and others at companies like Playdom and Playfish and Wooga and a handful of other game developers who saw that, all of these people connecting through Facebook meant that for the first time we could build games to be truly social in a way that was never possible before. And games have always been social. If you think about going all the way back to board games, we play them with people around us. But it hasn't really been possible until now to replicate that style of interaction through technology. And so from our perspective, what's happened in the games category is the early validation of what we think is possible across literally every category on the web. Our belief is that we're just getting started, that games are the first category. And it's also interesting if you think about past platforms. Games oftentimes end up being the first category that kind of validates a new platform. On the early PC platform, you saw games kind of emerge early on as a killer app. On the early iPhone platform, games have been some of the most popular early applications. And the same has been true on the Facebook platform. But when you see people like Bill who are building these completely new styles of interaction, when you see companies like Spotify who are really starting to replicate what Zynga's done in games in the music category, and then even some established companies like the Washington Post and the Guardian who are building their experiences on top of the platform to make news social. From our perspective, that just means that there's a huge amount of potential here, and we're excited to see what gets built.
Mm-hmm. And with games, though, it seems to me that there is a kind of Me Too element that we had sort of in the bubble years as well. Very formulaic games, even the same business models. Are we going to break out of that at any stage, do you think, or is that sort of a feature of the early stage of a platform like Facebook's?
I think that we've seen, what we've seen is that these games have done something that we believe is a critical formula for success in a social environment, which is that in many respects, the games are more social than they are games. You play a game like Farmville or Cityville to engage with your friends as much as you do to engage with the content in the game itself. And what's really interesting about that is those companies were never going to be able to compete with console graphics, right? Because they were building games for people to play on their computers. And so in order to build something that was compelling and that had the potential to get a lot of people using it, they had to pivot in a different direction. They couldn't try to replicate a Call of Duty style experience on a PC. And so what they saw was that there's another aspect of playing games that is really a compelling part of it, which is the engagement aspect. And they built those games to be primarily social. And that's led to a lot of people. In fact, we have over 200 million people a month that play games on Facebook. That's more than the combined total of Xbox, PlayStation, and Wii owners. So it's a very compelling model. We think that there's still a lot of opportunity for growth in that model. It's only 200 million people a month. And we also think that it's inspiring a lot of other types of gameplay, and we're just now starting to see new types of games coming onto the platform, getting success. And it's inspiring companies in other categories to try to do similar things. But one thing that you'll notice in all of the applications that get built on Facebook, including our own applications, like our photo application, which is probably the best validation of this model, is that they are all social first, or what we call social from the ground up. And the content and the experience and the interaction is really secondary. I mean, color is not going to be the highest fidelity video that you'll be able to take of what's going on around you, but that's not what it's about. It's about sharing that experience with the people that are subscribed to that. And so we call that the notion of social design.
Mm-hmm. And so you think there's going to be this diversity then? It's not just going to be Spotify dominating music and Zynga dominating games, and we're going to have a company for every verb that you come up with as we go along.
Absolutely, and in every category, we think that there will be companies that are really trying to reimagine that category to be social from the ground up. Certainly, there are going to be companies that pull ahead and really demonstrate the potential for this. But if you look at just even games today, there's hundreds of developers who are building games on Facebook, and many of them have had success. And even outside of Zynga's IPO, you have already in the last couple of years a number of very large exits. Playdom sold for $800 million, Playfish sold for $400 million. I mean, these are very significant exits for companies that are embracing this notion and pushing forward. And the companies that bought them, EA and Disney, are realizing that this is where the world is going.
So I can make a comment.
Yes, yeah, please.
Just one comment on that. I think one of the things that we're observing in looking at these companies, it's not the number of users, it's the engagement of the users on that. And it's very easy for analysts to do the count of Facebook as going up here. It's more challenging for them to get their heads around engagement metrics. And I think one of the keys to Facebook's success here is that they were much less aggressive at their partners in terms of trying to take revenues away from their partners than, say, AOL was in the early days. If you looked at AOL 95 to about 201, they were super aggressive in terms of taking tolls for using their distribution channel. I think one of the secrets of Facebook is that they have let their ecosystem, all these other companies, flourish much more than people normally thought they would. And I think that's one of the really creative things that I think that company's done.
Thank you.
Maynard, can I ask you about the kind of companies you're dealing with? You've been involved at every level, and what are their concerns?
Sure, I'd actually love to talk about eventually growing an app about work on top of Facebook and how to make that social, because I think we ought to have as much fun working as we do playing Zynga or playing games with Farmville, and it's so important. But I have had a chance to be in a lot of small companies and a lot of big companies, and you asked about profitability and how I think about that, and I think it all matters based on the stage that a company's in. When you're a startup, I don't think you wake up thinking about profit, you wake up thinking about relevance. Do I have a product? Do I have something that matters? Does anybody care that I'm out there? There's millions and millions of websites that nobody goes to, right? So you have to first care about, do I have something that the world wants? And then, like at eBay, we had a product that the world wanted and it was profitable day one. I don't actually think that happens very often. It's pretty rare. I've been in Salesforce is in the middle of this still, and eBay was in it for the most of the time I was in, that I was there, where it's very high growth and somewhat profitable. And we would always get a lot of pressure from the street about, can you give us more profits? And it was like, no, we want to give you enough to show that there's a way to go, but we're still investing. There's a lot of growth left, and I think it's really important to make sure that you can grow. Growth is a lot more fun than shrinking. I think when you manage companies, it's hard, and it's amazing how much your employees get inspired by growing, and they still complain about it's hard. It's hard managing shrinkage too. It's just a lot more fun managing growth, as you guys know at Facebook. So I think growing and growing fast for as long as you can is a good thing. And then at some point in a company's maturation, you start worrying about making sure you've got a lot of profits, but then your valuation and everything else starts slowing as you go into there. So for me, it's really a question of what stage you're in and what how do you manage through each of those stages. I also think cash, whether you're in a very early startup or a big company, is really important, and you have to keep your eye on cash all the time, and because that cash, as you mentioned, drives the flexibility you have. And I've seen too many companies in 2008, for example. I was the CEO of LiveOps, and people that went out and raised cash in June looked like heroes, and the folks that were waiting to December to actually get a little bit more traction so that the valuation could go up looked like idiots, and nothing in their business had changed, but the market totally dropped. And so it's a lot like credit. When you're young, nobody wants to give you any credit, and then when you've made some money and you don't need it, everybody's willing to give it to you, And so having enough cash to always be able to command and control your destiny is a really good thing, regardless of what stage you're in a company's life cycle.
LiveOps specifically, I mean, that's cloud, it's crowdsourcing. I mean, how do you kind of incentivize employees with that kind of model towards profit when you're so kind of diverse, as it were?
Yeah, it's actually an interesting dilemma. You know, we started as a services business and mostly in the direct response industry, which is not a huge industry. And we are very profitable in that side of the business. And we were growing nicely, but we made the strategic decision to go build out a SaaS platform using that technology, and thought that was more important to focus on growth, you know, than profit. And we're at 120 million-ish revenue, and you know, we're still in that transition from where we were to where we want to be. But you know, profit's very important. We'd like to have that, but I don't think you get. I think you have to have growth. Solve so many other problems, right? If you have fast, good growth and sustainable growth. To your point, you might not be able to have sustainable growth forever, but I'll take it while you can have it. For sure.
Well, I think it's time to open it up to questions because we're getting close to the lunch break. So would anyone like to ask a question of the panel on any of these subjects? Don't be shy. I can start with one if you like. I mean, Dan, can I ask you more about your platform, which is you know, enormous. I think it's the dial tone of social, as it were. But is it going to be the only platform out there? And as we move more to mobile, what's your strategy for that?
Our view is that clearly this is a pretty exciting time, and we're right in the middle of, or at the beginning of, a number of very large shifts in the industry. Mobile is obviously a big one. Social is a big one. The cloud is a huge one, and there are going to be platforms across all of those different areas, and there are going to be more than one in every area. The thing that we think is happening specifically with social, and it's bigger than Facebook. There are lots of companies that are validating this now and building great platforms around it. Is that we're moving from the first part of the first generation of the internet, which was really around information discovery through search, to what we think is going to be the next couple of decades of innovation, which is really around information discovery through social interaction and serendipity. And it wasn't possible to have that until you had everybody connected and people online with their real identities. You couldn't replicate the type of interaction we have in the real world until people were on the web with who they are and their friends and connections between them. But if you think about your real world interactions, the vast majority of the way that we discover information offline is through the people around us. Search as a paradigm for information discovery is actually a pretty narrow slice of how we find things out. Now, there are times when search is really important. Like, I already know a movie I want to see. I just want to know what time it's playing. That's clearly not going away. But the reality is that there are a lot more things that go into that original decision of what movie do I want to go see. And those typically end up being conversations with our friends and our family and the people around us that inform what movies we want to see, what restaurants we choose to go eat at, et cetera, et cetera. And now with the social web kind of finally maturing and coming into being, that type of interaction can take place. And the potential there is that you can get lots of different experiences that are built that start to replicate our offline lives in a more efficient way at scale globally, et cetera, et cetera. And so, companies like Facebook and Twitter and LinkedIn and all of the companies that are taking advantage of this and pushing this forward are really kind of catalyzing what we think is going to be the next couple of decades of innovation. That's really how we think about our platform, how we think about the social web. We talk about this as the shift from the information web to the social web, and that's where we think we're going.
Right. Just on that, I think it's affecting, the social revolution is affecting a lot of marketing firms and a lot of, part of my life is in the sports industry. historically, the people who have been very senior in the sporting industry are people who come up through the teams and that area. And I'm sort of pushing one or two of the major global and US sporting industries to hire somebody who's 30 to 35 who really gets this social networking world, because that's a very important aspect. And it's very hard in an organization where you've got a commissioner that may be on 15 million a year, who's 52, has been in there 20 years, to accept the fact that somebody who is 5 years, who's never kicked a piece of leather in their life, can actually be transformational in the way sport's delivered. And I think that's one of the challenges, whether it's FIFA, whether it's the IOC or the NFL. It's a hard thing, but it's profound. And if you look at the way that the marketing industry has changed, the idea of the 30-second ad and those things, and there's a whole people who went into those industries who were masters at the 30-second ad. It's still an important talent, but the portfolio of skills that the marketing agencies have to deliver to their constituency is much richer and much more demanding of the set of skills that used to be in those firms.
I got a question, Professor. Can I ask?
Yeah.
I mean, one thing that when we look at how fast things are changing, you know, the one and done thing is really real to us. Like we see how fast companies rise and fall. And I'm wondering, will that happen to traditional business? Because I think one of the things that's happening is that in the past, when you'd run an ad, you'd market your product to your customers, they would buy or consume it, and that was the end of it, and you didn't have to worry about it. That was your marketing strategy. We did that a lot at Apple really well. Mm-hmm. But the challenge I'm sensing is that so much of who my customers are is now they're my distribution. When they like my stories, when they share it with their friends, they become my distribution. So I wonder if companies don't understand that. I think there's a lot of investors in the room, like, is that cliff going to happen for traditional businesses too, not just for us? Because it seems like if you're not using those techniques, because if I love something and I have two choices, one which is I have to wait for them to broadcast me information, and another one is really engaged me and I'm really into it, I'm just going to, will I just move?
I think there's certain industries where the ease of moving and the built-up appreciation of what the product is such that you can move. But I'm actually thinking something like a Kellogg's or Nabisco or some of these. I actually think those ones are not going to be as prone to falling off a cliff. I mean, I get up in the morning and I have this Australian cereal called Vegemite, and I've had it for 30 years. Or longer than that. And I'm still going to be, before they put me in the box, having Vegemite. And nothing that in the social network is probably going to affect my behavior. So I think there's industries like that are probably going to be much slower to move. But in terms of telephones, mobile devices, how we watch television.
Yeah, media companies, right?
Media companies. I think sports appreciation, I think they're a little bit more ingrained through the generations of the family. So I don't see, if you like the 49ers, I don't think a couple of fans are going to shift you from the 49ers really quickly. I think there's certain things that are deep in your psyche.
I mean, I grew up as a lifelong Texan, so I kind of like this terrible football team. I won't mention it because I'm in the wrong area right now, but I got into the Mavericks a lot because Mark Cuban and the team over there did a really good job of communicating with their fans and keeping them engaged in what was happening with the team. And I did notice over the year, I was really interested in what was happening to the Mavericks versus the Cowboys. I just feel that there's so many choices for consumers now, and if things don't engage me, I'm just going to miss that level of engagement, especially when I get used to it.
I think expectations have really changed, and consumers want to not just hear from brands and celebrities. They want to be able to engage. The expectation now, and certainly 5 and 10 years from now, will be if I can't push back, if I can't have a conversation with you, then I don't want to hear from you. And it doesn't mean that traditional media is going away by any stretch. It certainly will always be an important part of it. But in a world where people are spending more and more of their time online, and where the standard type of interaction online is now a two-way dialogue. And that wasn't true for a long time. I mean, when you go to a search engine, you're not engaged in a two-way conversation. You're very much, taking part in what people are used to on television and other places. Think about the banner ad on the web. I mean, it looks a lot like a billboard, right? It's a message from a media company broadcast out to a large number of people without any way for those people to actually push back and engage. But the promise of the internet was always that this was going to be the first mass medium where we could connect all of these nodes and people could start having conversations, unlike television, unlike radio, unlike billboards and magazines. And I think that's now what we're starting to see, and that shift in consumer expectation will force marketers and companies to think differently about how they do that, to the point where I would predict that 5 years from now, if you don't give your consumer a way to engage with your product, you will eventually start to, that your market share will eventually start to erode. It'll feel the impact of that because somebody else is going to do it. And the consumer is going to choose the brand that they can engage with.
It's also, one of the things we see at Live Ops a lot is where that dialogue needs to take place is not in your center anymore. That's happening on Facebook or Twitter, and everybody needs to understand that that's where you have to go do customer delight, is out on the net, right? And on those apps, because that's where brand damage is happening and everything else.
And that's hard because that means letting go of control.
Totally.
That's a really hard shift.
But it's already gone.
You've already lost it. Absolutely.
It's already gone. So you just have to have ways to be able to do it as well as you can. And it's scary for a lot of people. We sell to a lot of call centers. They're like, oh, I control this and the queue time. And it's like, well, but the call never comes to you guys. It's just out here.
This is really tough for some of the groups who are used to controlling. Some of the sporting teams, when they started to have their website, do they sanitize the negative comments?
Yep.
And people who are used to controlling everything, the answer was clearly they do sanitize it. But there's all these other websites where if you sanitize it, people are just going to go elsewhere. And so I think the next generation of a lot of these entertainment and sporting companies is that they are willing to accept diversity of negative comments on their own site. And I think that's a healthy thing because it makes their site more relevant.
Yeah. Sorry, any questions? Yes, over there.
Yeah, this is a question. So this is Saurabh from Mahindra Satyam. Question is for Dan and Maynard, and it's: do you see a crowdsourcing kind of a business opportunity? So essentially, crowdsourcing business getting created on platforms like Facebook or Google Plus or any of the social platforms?
I think, first of all, I think there's crowdsourcing going on. Live Ops is one of the biggest crowdsourcing groups that we built on our own platform. I totally see that could happen on top of Facebook or a LinkedIn. I also think things like, first of all, the reason I believe that is, as you mentioned, the half-life of companies is changing dramatically. The whole way we manage people is pretty much the way it needs to change dramatically. Nobody's really happy. Tenure at companies is far less than it's ever been. I deal in my angel network with all these brilliant entrepreneurs that can't stand the thought of working for a company. And companies that were cool 5 years ago are no longer cool. And so I think people have to become the CEOs of their own destiny, and that means they need to, really control where they're working, and they want choice. And the technology has evolved and will continue to evolve far faster than the way we work and the way we manage, and we need to catch up. And so I think there's a whole plethora of potential to be built on top of things like Facebook. Let me give you one example, like mentoring, coaching. First of all, how do you get coached today in companies, especially young ones or new ones? That's a whole area that's missing. And then number two, is it really that smart an idea to get coached by the company you work for? How much are they going to help you control your destiny or tell you about all the options you ought to be thinking of when they want you to stay in their building? And so we're playing around in my investment network world with the idea of mentoring and how do you build that on top of a network so you can get the best minds to give you the best advice. That would be a perfect thing to sit on top of something like a Facebook or a LinkedIn in some way. So I definitely think you're going to see a lot more things happen like that because they can and they should. The technology and capability is much further ahead than the way we think about working today. So.
Yeah, I would say, crowdsourcing doesn't really require identity. It's about the wisdom of crowds. It's about a large enough number of people weighing in that sort of the right answer emerges from the mass of anonymous responses. And I think in a lot of ways, that's really been happening already on the web for the last 15 years. It's certainly an important part of how we discover information, and it's only been possible through the internet to start to really do that at scale. If you think about how you want to consume, for example, take the example of news. It's always going to be important to hear from an editorial voice what is important to them, what's going on in the world that you need to know about. And the Financial Times, I want to know what the Financial Times thinks is important in the world. It's also interesting to know what the majority of readers think is important, whether or not I know who those people are. If enough of them weigh in, it's interesting to me to see what the most read articles are, what the most emailed articles are. The third piece, which is the piece that hasn't really been possible until now, is what do my friends think is important? And so that's what we call the wisdom of friends. The wisdom of crowds is a well-established concept, and it'll continue to create really interesting use cases. Maynard's companies will build really cool companies around it. The thing that Bill's is working with, and the thing that companies like Zynga are proving, and Spotify is, I really want to know what music my friends are listening to. I want to know, I have a particular set of friends in mind who I know like the same kind of music that I like. I want to know what they're listening to, what new bands they've discovered. And that type of potential has really only been possible in the past by asking those people. And that's how we discovered new music. We had dinner with our friends. We found out about new bands that they listened to or new concerts they went to. We went out and bought the album. Now I can do that on Facebook when I see that they listen to something on Spotify. Immediately discover that artist, start listening to it, buy the album, et cetera. That's the wisdom of friends.
Yeah, I'm sorry, I'm very conscious of the time, and George talking about Vegemite has made me very hungry as well, so I'll have to end it there, sorry. Thank you very much to the panel, and thanks for listening.
Thank you.
Thank you.